Alright, good morning. Let's go over today's trade plan. So in Friday's recap, I mentioned that ideally buyers hold ES above 31 to 33 at this point, and so far since Friday's close, ES has been balancing above that zone, above the 31 to 33, and at this point, if buyers are to maintain control, we want to see the S&P holding above at least 31 to 33, but ideally even above the 1835 previous VPOC and gap. On the upside, we have pre-market resistance, 38 quarter to 40 quarter, and that is really the main resistance area at this point. That's the range where ES has been establishing the short-term balance. And at this point, if we can hold above 35, then buyers have a shot at breaking out above 38 quarter to 40 quarter, and that would bring the all-time high of 46.5 into play, and we could potentially even break out above there. So above 40 quarter, we have resistance at 44 to 46.5, and first test, there's always potential that we can get some profit taking, and we can get some selling activity on first test. But at this point, given how bullish the market has been, given the fact that NQ made a new yearly high last week, I would still rather focus on the long side and fading a breakout above 40 quarter at 44 to 46.5 would still be a higher risk play, especially because that trade really only makes sense if you're expecting an all-out failure. If you're just looking for a rotational move, it's not really worth putting on the risk to short 44 to 46.5. If you want to take some profit, or if you see some signs where momentum could be slowing down, it's a spot where you can certainly take some profit on the long side. But fading it on first test even is still a risky move because, again, NQ made a new high last week, so ES could simply be playing catch up at this point, and we can break even above 46.5, go up to 51.75 to 53.75, and potentially even higher. There's really no hard resistance above 46.5, right? That's the all-time high. So if we break out above that, there's nothing really stopping the S&P from going up to 51.75 to 53.75, even higher, before we start getting some profit taking and some balancing activity. So that would be the upside scenario, and that's the main one that our focus would be on, and that's in play as long as 31 to 33 holds. In the event of a failure to hold 35 and a break below 31 to 33, at that point, those lower support zones would come into play. 25 quarter, 27 quarter is a test of Friday's breakout, and if we get a breakdown below the overnight lows, below pre-market support, that would be the next zone that would need to be tested. Now, because the overall trend over the last couple of weeks has been to the upside, buyers can enter at any of those zones. On first test of any of the zones, we can get bounces, we can get rotational moves. So, that can be 25 quarter to 27 quarter, 20 half to 22, or if it's a, higher momentum and, more kind of a higher conviction move to the downside, then we could go lower as low as 14 to 16 half and then start bouncing in a wider range. But, first test of every support zone has potential to technically shut off the selling, attract buyers, and then send ES back up to 31 to 33, 35, and higher. So those are really the two main scenarios. The primary one is still a bullish scenario with a breakout attempt up to 46.5 at the minimum, 44 to 46.5. And in the event of a failure, then we can expect a retest of Friday's breakout or some lower prices. But eventually, given the bigger picture, buyers can step in at any of the zones. So those are really the main ideas. We have an econ report out at 9 a.m. Central. Aside from that, so far we're running below average volume. We have several econ reports out tomorrow and Thursday. So, this could be an instance where, even if we get a break above 40 quarter, we don't go too much higher than 46 half, but, it's just not a market, not an environment where I'm willing to bet on the short side just yet. Everything is still supporting the upside. So that's really going to be our focus. And if we do take any shorts later in the day where ES could be overextended or exhausted, that's something we'll have to figure out in real time. At this point, the focus should be on the long side, especially above 1835. So those are our main ideas. Let's see how well the S&P holds up off the open and after the 9 a.m. Central Econ reports. Let's keep an eye on the NYC tick to gauge the overall momentum, because we do want to see upward skew on the tick for continued upside movement. And keep an eye on the internals. Again, we want to see some positive AD lines. So that's really what's going to set the context for the day. And of course, if we can get some better volume, that'll improve the odds of a slightly better range on the day time frame. So those are all the ideas to keep in mind. Let's see how well we hold up, and we'll take it from there.